Okay. Good morning, everybody. Welcome to American Telugu Association workshop webinar today. So, uh, for today's purpose, we have Harmeet, Chris, and then Lada. So they're going to pitch in the presentation. So before going that, I just wanted to tell you a little about the organization itself, right? So ATA has been there, is the oldest organization. It's been there serving people and the NRA community here, especially Telugus, plus other Indian community. So we have been doing various other programs uh, for the beneficial of the youth, uh, for pretty much everybody who are part of this society. Uh, so in this today's presentation would be a very good, interesting presentation for you. It's more of a financial workshop. It's going to benefit most of the members to make aware of their financial planning, support investing, protecting their assets. And we have experts, Lada, Chris, and Harmeet online. So they're going to answer your questions. So the process works, for today's purpose, the process is like, we'll have a presentation for about 40 minutes. And then we'll have a Q&A session at the end for 10 minutes. So for the Q&A sessions, we would request you to post your comments on YouTube. I'll take those questions from the YouTube and then ask the questions at the end to our experts here, financial experts. And meanwhile, we'll also request you to also register to tinyurl.com/artofin1 for the raffle. That would be helpful and beneficial for everybody. So hope you'll have a nice time, and over to you, Lana. Lada.
Yeah. Yes, Shrikant, good morning. Can you hear me?
Yes.
Good morning, Shrikant, and everybody. Thank you for the kind introduction. Good morning, everybody. And first of all, I want to say thanks to our president, Mr. Madhu Balkani, for giving us the opportunity, and all the entire ATA team for this opportunity to share the information what we have. We are blessed to have a Indian community in this time working very hard and well set in US. But at the same time, knowledge is very important. So today we came up with a lot of good nuggets for you guys to share with you guys to understand exactly how market's going and what can you do to help build your wealth. The same time, just wanted to have a disclaimer with you guys that this 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 information just for the education purpose. I'm not a tax attorney, or neither my team is tax attorneys or CPA, or we advise anything on the taxes. But there is a lot of things we are talking today is going to benefit you from so many different areas. So I'm not going to talk too much about taking so much time from you guys. Myself, I'm Lada Bedi. I'm from Atlanta, Georgia, financial professional, and I've been working in this field for such a long time, along with my partner Harmeet Singh. And we want to say special thanks to Mr. Chris Agua from Philadelphia, who is going to join us as well, and he's going to share some nuggets as well. He's a vice field president for Southeast region, so he's going to be joining us as well. Like Mr. Sherikan says, if you have any questions, you can please write it down in the chat box. At the end, of course, Mr. Sherikan is going to talk to us, and we'll try to give the best of our knowledge to answer those questions. And best of the best part, of course, we have some raffles coming up too, right? So which we are going to share with you guys at the end. To start with, I'm going to ask Mr. Harmeet Singh to please come and share the knowledge with you guys with that. All the best, stay focused, and enjoy the show. Thank you. Here we go. Mr. Harmeet.
Well, thank you for the introduction, Lada, and good morning, everyone. I know it's a Sunday morning, and Sundays, man, we could be doing so many different things, right? I know we have some people going to church, and some of us could have been spending time with their family, but we're all here online and on YouTube. And this, I promise you, this presentation is just going to be very informative. Okay, so it'll be worth your time being online today. And the one thing I would like to thank you all for joining. And I'm just going to share my presentation. And we have a few of us presenting today. I'll be starting off, and we have Chris from Philadelphia, who's one of the VPs for Pacific Life, and I want to thank him again for joining us today. And I know we will all have questions and answers. If you have better questions, we'll answer them. I'm just joking. But please, if you have any questions, we're on the YouTube channel, so you can put it in the chat box, and we'll answer them towards end of the presentation. Okay, look at that. We got some nice pictures up, huh? I hope we don't look different on Zoom, but this is us, right? Amarpal Singh, also known as Lada Bedi. We have Chris over here. My name is Harmeet Singh, but sure, you can call me Hammy as well. We've been working in the financial service industry for quite some time, actually, for a very long time. And today, our overall goal, we're talking to a lot of members of MATA, and we realized that, like the financial information, it's very important for all of us. Okay, there's a lot of knowledge out there, but a lot of us, we don't retain it, or a lot of us don't know much about it. So our overall goal today is to just share information. Okay, there's a lot of information out there. I know this is going to be a short session. Okay, we cannot cover everything in like the next 45 minutes, but it's going to be a very powerful one. Okay, so we'll cover whatever we can in the next 45 minutes to 1 hour. So we have an agenda for today. We are going to be covering several different topics. We will talk about how to build wealth. Where do you want your money to grow? Supplement for retirement solutions. There are other solutions out there. You just have to think outside the box sometimes. Okay, there's so many different ways when it comes to retirement, other than traditional ways. We're going to talk about tax now, tax deferred, and tax advantage. Right? Where do you want your money parked today? Or do you want to save taxes today? You want to defer your taxes? Where can you do better off? Growth versus safety. What is more important to you? Okay, some of us, we're very conservative and we're like, you know what? We want to be safe. Okay, and then some of us, we're risk takers. Okay, we want growth. But the question is there any place where we can receive both growth and safety at the same time? When it comes to life insurance, right? Do you know how to buy life insurance? Life insurance could get very complex because there's so many different types out there, right? And there's hundreds of different companies. So, which one is better, okay? Or which one is a need for you? Because we all have different needs, and life insurance works very differently. And overall goal today is we are also going to cover the life insurance topic. We will cover the ones that are the most popular ones out there, okay? But we represent, we're a broker company, so when it comes to life insurance, you name it, we have every single one that's out there. But we will cover some of the major popular ones that are out there, okay? So if you have life insurance in place, maybe you can understand better about your own policy as well. We're also going to talk about the concept behind index strategy, and a lot of us here in the corporate world, and 401k is very popular, so we'll also briefly go over some concepts with that as well. Okay, so when it comes to retirement, what are some possible solutions, right? What are the most common retirement vehicles that are out there? Traditionally, hey, we start off, hey, with the corporate world, or even if you have a business, we're like, okay, you know what? 401k plan is the way to go. Okay, if I have a room filled with 100 people, I ask people, hey, who has a pension plan? I don't know the younger people. I mean, we don't. There's no pension plan now, right? But if I have a room filled with 100 people and I ask who has a pension plan, maybe 5 people may raise their hand. Okay, a lot of us have 401k plans, and if you do, that's great. But do you understand the fees that are attached? Do you understand how 401k works? And the last, few recent years, right? Like the market's been all over the place, and I know a lot of us have 401k accounts, and a 401k has been all over the place too, right? So if you have a 401k, your company's matching, that is amazing. Okay, but what other solutions are out there? Some of us, we're like, you know what? Okay, I have a 401k plan, or some of us, we might be like, okay, I don't believe in 401k. Hey, let's do some real estate. Okay, we buy real estate properties. We do commercial real estate, we do residential. Either we have tenants, we lease them out, or some of us we flip. Right, we buy properties that we flip them. But the recent years, COVID hit bad. Okay, I know a lot of people that had tenants. Even the government, came in place and helped up. A lot of people had tenants that were not paying rent. Okay, each state has different regulations, and when it comes to flipping, right, it's amazing,
right?
But so when we're doing with properties, right? But yeah, so real estate is also great. If you're in the real estate and you know what you're doing, that is also very amazing as well. Okay, and the third way is brokerage accounts. Okay, the stock market, mutual funds. Many of us we love investing in stocks, and we believe that okay, you know what, 401k, real estate, and you know what, I'll invest in stock market, right? I'll do some mutual funds and I can work with that, right? Some brokerage accounts. Some of us we park our money in all these three areas. Okay, these are the three most popular solutions that are out there. But one thing all of them have in common, all of them have in common is that Uncle Sam is always there, right? There's always taxes involved everywhere. Okay, whatever we do, we live, we sleep, we die, taxes are always there. Okay, but if you guys are investing in these vehicles, that is amazing. Okay, I'll give you guys a thumbs up for that. But there is one vehicle that not many of us actually think about. Okay, and you don't think I'm crazy when I say this, right? I'm gonna bring it up, but it's actually life insurance. Don't get me wrong. Life insurance, the purpose of life insurance is something happens to me today, my family gets the wealth, right? I get the wealth transfer, or also for estate planning, right? There's so many different advantages of life insurance. But if you have the right vehicle, okay, and if you fund it properly, you can take many other advantages out of life insurance. Okay, I'm not saying life insurance is a retirement plan. It's not. Okay, but if you strategize it properly with financial professionals, with any financial professional, if they know what they're doing, or people like us, right? You can strategize a life insurance plan and also build supplement for retirement income. Okay, it is one vehicle where you can also build income as well. And there are so many reasons why people build income through life insurance, which we will talk about throughout the presentation. Okay, but life insurance, I'll give you a little heads up. Okay, it is a vehicle, but you can also save taxes through it as well. Okay, if you strategize it properly. I'm keep on saying that it is very important to strategize the plan. So let's talk about taxes. I know a lot out here earlier said, hey, we're not tax professionals, but hey, I can still talk about it a little bit. Okay, so a joint income tax bracket up to 37%. We make more money, we end up paying more taxes. Okay, if you have businesses, yes, you can do write-offs, and there's always so many different ways. But let's say when we retire, what's the tax bracket going to be at that time? Okay, some of us, we are in retirement age. Some of us, we still have time for retirement. We might have another 10 years or so, right? But down the road, what is the tax bracket going to be? Okay, and the other question is that, hey, is there a way where I can still take out, let's say, $100,000 or $200,000 out for income and still pay lower in taxes, right? How can I take out a lot of income and not worry about my taxes going higher? Okay, instead of 22 or 24% in taxes, is there a way I can pay only 12%? Right, instead of paying to the government, to Uncle Sam out there, right? Is there any way where I can still take out the income I need and pay lower taxes? That's the overall goal. A lot of us, we worry about, okay, what's the return I'm receiving? Am I getting 10%? Am I getting 15%? Right? But we really have to account inflation and taxes as well. Okay, if you account that, then you'll really realize what is your real rate of return. So this is something that's very interesting. Okay, I'm not going to go into detail, but something to look over. The history of taxes. Okay, look at that, 1944, 94%, which is ridiculous. Okay, but if we look at 1981, which is not too long ago, right, the Reagan era, it was 70%. Okay, this is in 1980s, which is not too far out. Okay, it's not like I'm talking about the 1940s. 1980, it was still 70%. And if you look into history, we are actually in one of the lowest tax brackets right now. Okay, so something to think about these recent years. COVID happened, it was life-changing for a lot of us. A lot of us still made a lot of money, right? And a lot of us, our whole life changed. And it's crazy how COVID was just it just an eye-opener for a lot of us. Okay, but the government, there's the unemployment rates were high, right? So many loans were lended out by the government, right? So the government funded so much money in the economy. But if you think about it, right? How they're going to get their money back. Okay, so something to think about is the next couple of years or next 10 years or so, are taxes going to increase or are they going to decrease? Okay, and this is very important because a lot of us that have tax deferred accounts today, such as 401k or other accounts, right? It's very important to know this because, for example, for me, right, if I retire in the next 20, 30 years, if I have a tax deferred account, right, and if the tax brackets go up to 50, 60%, right, I'm losing a lot of money. So something to think about is that, hey, should I defer my taxes or should I pay my taxes today and let my money grow? Okay, which route do you want to take? Or you can diversify. Okay, there's nothing wrong with that, right? You can have some tax deferred accounts or you can save some taxes today as well. Okay, so I was mentioning about life insurance earlier, right? And I said that, hey, it depends on what policy you have and depends on how you fund it. Okay, I'm going to talk about one of them right now. Okay, this is the one is called IUL, Index Universal Life. And there are so many companies that have this product. Okay, and we're a brokerage firm. I know Lada's going to talk about more about our company, but we're a brokerage firm and we have most of the top A and A plus rated companies out there that have IUL. But along with IUL, we are going to talk about other products as well. Okay, but IUL, right? When we're investing or when we're looking to invest our money, of course we're investing for some growth. Okay, so IUL, it comes with growth. Depends on the company and depends on the index strategy you choose. Okay, but overall, industry-wise, you can say the average is roughly 7 to 9%. Okay, and then a lot of cases they're a lot higher too. It could be slightly lower too, right? But overall, let's say 7 to 9%. And the best part is that a lot of times we invest. Okay, we have that growth, but the problem is we don't have safety. Okay, so any index product out there in the market, it comes with growth and it comes with safety. And again, it depends on the index strategy and it depends on the company. But every single index product out there has a guaranteed floor. Okay, in insurance terms, they use floor. Majority of them is 0%. There are very few companies, they might have even 0.75% or maybe close to 1% as well. So what safety means is that let's say tomorrow, the market crashes 10%, 20%. Okay, so when the market goes down, the insurance companies take up that loss. Okay, and they give clients 0%. They're like, okay, you know what? The market did 20%, but we have it in the contract. You won't lose your money. Okay, we give you a guaranteed floor. Now, when it comes to growth, if the market goes up, okay, depending on the index strategy you choose, you have the retention, you have the gain as well. Okay, now some index strategies, they might have a cap. They might be like, okay, you know what? The maximum cap is 12%. So what that means is that, okay, let's say the market goes up 14%, you only get 12. Okay, but if the market goes up 10%, you get 10. If it goes 5, you get 5. And then there are some strategies out there that have growth factor that there is uncapped. Okay, so basically there's no cap involved. Okay, and then there are some participation rates and there's a few other things that you can actually get more rate of return. But I'm not going to go too much into detail today. Maybe we can save that for another session. But you can say average 7 to 9% is the average rate of return for the growth, and it comes with safety as well. And the biggest part is here. All right. Now, a lot of you guys might be on like, man, Hammy, you know what? 7 to 9% it's okay. It's not that much. Okay. It's pretty fair. Okay. But what I can say is that the tax advantage here makes the biggest difference. Okay. Again, if you fund it properly, okay, I'll keep on saying this because not everyone can do this. If you fund it properly and get the right product, you can actually take out tax-free income from this vehicle. Okay, so it has the growth, it has the safety, and it has tax-free income. End of the day, it is life insurance, so it has tax-free death benefit as well. Okay, it is a life insurance product. Don't forget about it, right? So it comes with protection, right? So the death benefit is there if you get qualified, and if you want to add long-term care, that is also there as well, and terminal illness, right? So this one vehicle over here covers all aspects of our life, all right? It has the growth, it has the safety, it has a tax advantage, and it has protection as well. And I know Chris later on in the presentation, he will give you an example how, tax-free income, how that helps you out during retirement, okay? How you can diversify your funds and have some of your money parked over here and take out tax-free income. So understanding your growth, all right, this is very important. Many of us here, right, we're looking for more safety. We are very conservative. We're like, you know what, I just want my money safe. Okay, we might get some cash, put it under our mattress. I'm just joking, but most of us, we have our money just in the bank account, right? We're like, okay, you know what? I was putting the savings account. Bank makes whatever out of my money, but hey, you know what? At least my money is safe, right? I have FDIC insured. My money is safe in a way, and or I can say, you know what? I'll put in a CD, right? I might get maybe 3 to 4% return. I'll put it in a CD account. Okay. And then a lot of us here, the problem is, okay, our money is safe, but then we don't have a growth factor, right? There's less opportunity. The other factor is that, okay, you know what? I like taking risks. Okay. I'm not that conservative. I like to take risks. And then I end up on the right side, you can see, I invest in the stock market, mutual funds, right? So there's more opportunity there. But the problem is there's no safety, right? Safety is very less. Okay. So what do you do? So the other thing is that what I was just talking about earlier, right? So to have a balance between both, right? Index universal life actually covers that part. Okay. Because it has the guarantees from the insurance companies, right? And then it has the growth factor as well. So if you see it, it has best of both worlds. Okay. So let's talk about long-term care. A lot of us think that, oh, okay, when I get, I'll get older or after my retirement, or maybe if I'm 80 or something, I need long-term care then, which is not true. Okay. Each and every one of us would need, it's good to have some type of long-term care because, God forbid I'm driving tomorrow, I get in a car ride and, I cannot use my arms, my legs, right? So long-term care is very important. And it's usually just 2 out of the 6 daily living activities when it comes to the insurance world. They look at 2 out of the 6 daily living activities: eating, transferring, continence, bathing. If you need help going to the bathroom, you need help dressing. Okay, then you can get qualified for long-term care as well. Okay, there are some insurance companies, that we have. If you get a life insurance policy, you could add long-term care to it. Okay, with the minimum fee. All right, you can add long-term care to it, and then what they will do is that they will pay you 2% of the death benefit every single month. Okay. And it's a 90-day period, right? And then there are some policies out there you can also buy individual long-term care as well. Okay, instead of having money in the bank, hey, you can put it into a policy, right, where you can just put cash over there, and then they will cover you for long-term care, right? So there are a lot of different long-term care products that are out there as well. And thank you, Laura. It is not covered by health insurance. You just mentioned that, right? So what other types of protection is out there, right? Like I was mentioning earlier, right? What type of life insurance do you need, right? There are so many different types of policies that are out there, so many different products. It gets very complex. I'm not going to cover every single one today, right? But I'll cover 3 of the most popular ones, okay? And again, like I mentioned earlier, right, we're a brokerage firm, so we have all different types of life insurance, all different types of products out there. Just to let you guys know, right? But I'm just going to cover maybe 3 of them today. So first one is very simple to understand, is term insurance. Okay. Term insurance is you receive a death benefit for a duration of the term, what you get qualified for. You might get qualified for a 5-year term, 10-year, 15, 20. It goes up to 30. Nowadays, they even have 35-year term. So there's no cash value involved as well. So for example, let's say if I'm 30, I'll get a 30-year term policy for $500,000. Okay. By age 60, I'm covered. One day after my birthday, the policy is gone. Okay, that's what term insurance is. So there's always pros and cons, right? The pro is that, okay, you know what? The premium is extremely low, right? I'm covered at least for the next 30 years or whatever I get qualified for, and I have the death benefit. God forbid something happens, my family does not have to worry about paying the mortgage for the home, right? Or there's so many factors that this money could help my family. Okay. Yes, I agree. Money is not everything. It's not. But it could definitely help us solve a lot of problems as well. Okay, just by planning, you can help your whole family out. So term insurance is also one of the great vehicles. And now you're like, you know what? I don't want temporary insurance. Okay, but I don't really worry about the cash value and all that either. I want something simple, but I want something permanent. Then there's a product called Guaranteed Universal Life. Okay, what this is a permanent policy. You're covered to 100. You get a permanent death benefit instead of a term where you're only covered for a duration of time. GUL, right, Guaranteed Universal Life, you are covered permanently. Okay, but the beauty of this product is that they all have an ROP option, a return on a premium option, which I'll share with you in the next few minutes, right? I have a sample illustration. And what happens there is that you have, you know, 3 options, which I'll show you, where you can get the return of premium. All right, which is very interesting. And now you're like, you know what? You know, term is great. You know, GUL is great too. What other option I have? And the other popular one nowadays is index universal life, what I was talking about earlier. Okay, if you're someone that needs a permanent death benefit, and if you want some cash value there for to use later down the road for whatever reason, okay, you don't have to wait till 59 and a half and all that, right? You know, you wait a bit, but you can access the cash value. Okay, then if you fund the product properly, you can actually have income coming to you as well. Okay, so if you're looking for a permanent policy where you get some cash accumulation from the index accounts and have some guarantees involved, the index universal life is the way to go. Okay, so overall today the goal is to give an overview. Okay, and then if you want more details, right, we can definitely do a one-on-one session, but it's hard to cover you know, these topics in detail within the time frame we have. Okay, I know it's Sunday, right? And if you're married and, you know, our spouses are going to be, man, you spent the whole Sunday learning about the policies and all that, right? But hey, we just want to give an overview today, okay? So just to give you an example on term policies, let's say someone is looking for a 10-year term. This person is healthy and he wants a $500,000 policy. So someone that's 25, right? Man, now you might be wondering, looking at these numbers like, wow, why are male policies more than female? Right? Is it because the females give us all the headache and then we pass away quicker? No, I'm just joking, right? But maybe, is that what it is? I don't know. Okay, it's not that. Okay, you gotta give us a reason. I'm just joking. I'm not married yet, so I can do all the jokes, right? So male quotes, right? Someone's 25, right? It's only $13, roughly $13 a month. Okay, 35 doesn't make much difference, right? Still under $14. 45, $27 a month. 55, $67 a month. Okay, you could literally get a 10-year term policy for around 30, 40 bucks a month. So now females, right, it's slightly different, not much. For someone 25, only $11, right? When you go up to 45, $23, 55, $49 a month. So just by paying this premium, right, you could be actually covered for the next 10 years for $500,000. Okay. Yes, if you get qualified, there's 20-year term, 30-year, and sometimes 35 as well. And yes, the quotes will be different, but when you're comparing term policy to permanent, right, term quotes are very cheap, right? So if you have no policy at all, and you're considering something, hey, get a term policy, you know, at least be covered by something, okay? But yes, it is for a duration of time. So after 10 years, the policy expires, okay, or whatever you get qualified for. So now let's look at an example of GUL, okay, which is guaranteed universal life. I know we see a lot of numbers here, but it's very simple, all right? This is for someone that's 40. So when they're 41, okay, the premium is roughly around $3,600 a year, okay, for a $500,000 policy. Now remember, this is permanent policy, okay? It's very simple to understand. There's no cash value or any index accounts involved, but you get the ROP option 3 times. Okay, you have 3 options, and I'll go over that, right? So $3,600 a year, okay? Now we're here by year 15, okay, when this person is 55, if he wants to cancel the policy, right, he could surrender the policy, cancel it, and he will get $41,000 back, which is 75% of what he invested into the policy, okay? Now, the second option comes in year 20, okay? Year 20, he puts in around $72,000, and he gets the exact same money back, $72,940. For he has a $500,000 policy. He was covered for 20 years, and he's like, you know what, Hammy, I don't want this policy anymore. You know, I just needed it for 20 years. Now I'll get all the money back. But hey, in that 20 years, he was covered for $500,000. Now the third option comes in play in year 25. Same thing. Okay, whatever you put into the policy, he'll get 100% of that back. Okay, he put in $91,176. He gets back around $91,000 back. He surrenders the policy, he gets all that money back. So if you're comparing it with term, this is one other option. Okay, now if this person wants to keep this policy, you can. Okay, he is covered to age 100, what I was mentioning earlier. All right, now let's look at age 80. He put $145,000 into the policy. God forbid something happens, he is covered for $500,000. Even age 90, he puts in 182, but hey, you have $500,000 of coverage. So this is a permanent policy, goes to age 100. Okay. Man, I hope you guys enjoyed my part because I was having a lot of fun, right? But you know, we have a next presenter here. His name is Chris. He's a buddy of mine, but hey, he's a VP of Pacific Life, and I really want to thank him for coming out on a Sunday and sharing a few words with us. And I'm going to stop sharing, and Chris, you can jump on and you can share your side of the presentation, and then we'll go from there. Thank you all. And please remember, if you do have some questions, we'll try to cover some of them. You can add the questions in the chat box on the YouTube channel. And also remember, if you could register, right, you will see the link on the screen. If you could register, and we'll give out some raffles as well. Thank you, guys. Okay, Chris, are you on?
I'm here. Actually, Hammy, I can't share, but do you mind putting up the presentation again, and you just do the slides? I don't have the ability to do this. Yeah, that's I think it'd be easier.
You know okay.
I have the slides. I just can't control them right now.
Okay, sure. I can share from my side, no problem.
So hello, everybody. Thank you again for taking time on a Sunday afternoon. Obviously, this is really an informative presentation. And just to kind of give you some background, I've been in this industry for 24 years, and I've worked with a lot of business owners, and I've worked with a lot of people really trying to plan for their future retirement. Now, the most important thing that I have educated both insurance agents and financial advisors and clients myself is really to categorize or put all of your assets into 3 different buckets. And this is kind of a concept that really will help an individual really plan for their future retirement, right? Because, whether you're 20 years old, 30 years old, or I'm in my 40s, we're obviously always trying to grow our money as quickly and as fast as possible with as much risk as we're willing to tolerate. But really growing this big bucket of money for the future really takes additional planning to really maximize how much you have in the future. And just to kind of give you an idea, these 3 little buckets that I'm showing you here, you can take any asset that you own and put it in one of these 3 different buckets. Okay. Now, here in the United States, a lot of people are trained to think about retirement plans. These are the retirement savings, the assets that we put into some type of investment, and it's pre-tax. So we might get a tax deduction when we contribute to a traditional retirement plan like a 401k or an IRA. That's the good news. A lot of people really like retirement assets because we get that tax deduction today when we're contributing to it. Now, the downside of these types of assets, and this is the assets held in retirement plans, is that when you go to access the money in retirement, you're generally taxed at income tax rates. So your current tax rate today might be somewhere between 24 to 40%. So just think about that. Over time, when you start accessing these monies for retirement, you might not be paying taxes now, and you might be getting a tax deduction now. But the problem is in the future, when you start accessing it, you might get hit between 25 to 40% in taxes. And that's assuming taxes don't go up higher. Now, the middle bucket is your taxable assets. And those are your assets that you're putting in money, you're investing in it. It could be real estate, it could be stocks, it could be mutual funds. But essentially what you're doing is you're using after-tax dollars to grow your money. And you have to pay capital gains tax when you sell those assets for a gain. So those don't have any of the tax deferred growth on it, but they're taxed as they grow on it. Now, the third bucket, the most right side bucket, is really the overlooked asset that a lot of people don't kind of realize and think doesn't make a difference. And these are your tax-free buckets. And this is what I talk a lot about with both financial professionals and with clients, is that many people overlook this type of asset. Now, the traditional ideas of this is that you're putting in after-tax money. So you're getting taxed on the investment when it goes into the investment. It grows tax deferred. So that's a good thing, is you don't have to pay taxes as that bucket is growing. But then the good part about it is that when you actually access that money for retirement, they're generally tax-free. And that could be a very, very powerful tool when you're really planning on your future in retirement and trying to really manage your tax bracket, not just today, but in the future. Examples of these types of overlooked assets are like Roth IRA, which have limitations. You can only put so much in, and if you make too much money, they're not available generally to people. There's municipal bonds out there; they have special tax treatments. But if you're familiar with bonds and municipal bonds, the yield or the return might not be something that's very attractive to a lot of people. The one thing that a lot of people overlook is life insurance. Life insurance is a after-tax investment. So you're putting after-tax money into this vehicle, life insurance. It grows tax deferred. You build up equity in your life insurance policy if properly structured. And then you can take loans and withdrawals out of this asset and not have to pay taxes on it, again, as long as it's structured correctly. So we're going to kind of a little bit talk about this overlooked asset by comparing somebody who, let's say, is 45 years old and really is looking at, how much, what can I do now to properly plan for and maximize my retirement income? So the example that I'm going to use is a 45-year-old. Okay, so this is somebody that's making a good amount of money. They have a good job, or they've done really, really well in their investments. And let's just say their dream is to retire at age 66. Okay, and let's just say their dream, their idea right now is to take out about $300,000 when they turn 66. And they're planning on taking $300,000 for the next 20 years. Okay, so that's kind of like the baseline. Okay, now if this person had all of their money in that traditional retirement account, okay, that's the one where it's tax deferred growth, but you get hit with taxes when you distribute. Okay, if you are trying to properly plan and trying to build up this nest egg, if you start taking money out, let's say this is your only bucket, $300,000. Well, there's state income tax, okay? And we're just using a conservative rate of 5%. There's federal income tax, right? So you're getting hit with both state and federal income tax. And that adds up to maybe about 30% if you're in a higher tax bracket, or if taxes go up, that's going to be even more. So for this person who's building up their retirement, their traditional retirement plan, and taking $300,000 out, that money is going to be taxed. And they're really only going to net out about $212,000 out there, right? Because of all those taxes. Now, let's just say, let's utilize some of those other buckets when we're trying to plan and maximize our retirement savings. So if I just go and use some of the other buckets, and I'm taking the same $300,000 out, next slide. So let's just say I'm going to take $100,000 from my retirement account. That's my 401k or my traditional IRAs. That's 100 of the 300. Then I'm going to take $100,000 from my taxable account. That's my middle one. Okay. So obviously I don't have to worry about the state and federal income tax on the taxable income, but I do have to pay state capital gains and some federal taxable gains. And then let's just say I'm planning today, and I'm going to build up that last bucket, that tax-free bucket, and whatever that is, whether it be life insurance or a Roth IRA, I'm going to take out $100,000 from that third bucket. Well, I'm still taking conceptually $300,000 from my assets. But if you can see, because I'm using some other buckets to actually take money out of, I'm actually getting more net money into my pocket in retirement. So instead of getting $212,000 of income, I'm still taking $300,000 from my assets, but now after taxes, I'm netting about $252,000. Okay, you see that's a big difference. Again, I'm assuming no raises or increases in tax rates, and a lot of people think my tax rate's going to be lower in retirement. Well, good luck with that. I don't know what's going to happen. Nobody has a crystal ball. But the only thing we can do is manage our tax situation. Now, if this same client said, listen, I really like this idea. I'm planning for my future retirement. I got about 20, 21 years. Let's just say I can put more money in this often overlooked tax-free bucket. So I'm going to properly start planning today where I'm putting my money. So here in this scenario, I'm going to still use my traditional retirement accounts. Okay. I'm going to still use some of my taxable bucket, my middle bucket. Okay. But I'm also really going to focus in on that tax-free asset, okay? Now, if you end up taking all those distributions, I'm still taking out the $300,000 is what I'm looking for, but my after-tax cash flow to me in retirement is now up to $263, almost $264,000. So in this scenario, I'm still taking out $300,000, but I'm netting a lot more in my pocket in retirement. And this can be a very, very powerful tool. If you're 60 or 61 years old and you're going to retire in a couple of years, you don't really have the time to really properly structure this. But if you're in your 30s, especially if you're in your 30s, your 40s, or even your early 50s, now is the time to start thinking about these three different buckets when you're trying to maximize how much you're going to take out in the future. Okay, so that's just kind of an idea. You know, again, really think about those assets that you have right now, and do an exercise. Go look at them and say, are they tax deferred like 401k? Are they taxable like stocks and real estate and mutual funds? And really, how much of that tax-free asset do you have? And ask yourself, and then you can start having this conversation and start planning if you have enough time. So next slide. You know, at the end of the day, life insurance is just one piece of the pie, right? And everybody realizes that you can't put all your money in one basket. But life insurance, and especially cash value permanent life insurance, can be a very, very powerful tool to complement everything else that you might have. You might have businesses, you might have gas stations, you might have real estate, you might have all these different assets. But really what I want you to think about is, think about, can we really help you, and can you help yourself by really increasing this tax-free bucket? Because many, many, many people that I've talked to over my almost quarter century in this business haven't really considered this type of asset. So thank you again for your time today on Sunday, and I'll stick around obviously if there's any questions and answers towards the end. But I'm gonna pass it on to my really good friend Lotta Betty, and take it away.
Thank you, Chris. Thank you. I really appreciate. I'm gonna mute.
Yeah, you're good.
I'm good. Okay. Chris, thank you very much again. I really appreciate for your time. Sunday morning, you coming here. So I hope the information shared by Harmeet Singh and Chris is going to helpful a lot for you guys. I'm going to close with a few slides. I just wanted to give a last few slides to share with you one thing which is very important. Harmeet, can you please help me with that? Okay. So one thing is the big challenge in our life, which is nothing but GoFundMe. See what Harmeet shared earlier. If 25-year-old person can buy a life insurance for 10 years with only $13 a month, right? So that means this person is actually wanted to take care of his family. Instead of depending on community, and for them, if something happened to me today early age, and I go back to my community, and of course my community is going to be there for me to help me. But if I'm making money and I have a family, I don't want to be a burden on my community. I want to make sure I take care of myself. And I want to send this message to everybody, and I want you to please educate all your friends and families to see what GoFund means to you. Can GoFundMe actually help your family? Why the GoFundMe actually was created? The reason was created, something accidentally, something happened, especially on the students who come from overseas for study or work, or anything happened for them in early age. Actually, that is a right product for to help their family so we can take care of their body or something, sending back to India. But at the same time, if I'm working here, living here for a long time, I have my kids and my wife, and I have a house, and I have my job, I want to make sure that I take care of myself and my family. If I can afford something good like Chris just shared, right? Yes, I can buy something good, and I can build tax-free income for myself. I mean, we have a program where we can help you to understand more about this product, setting one-to-one, because there's a confidential information. We don't share your information or sitting in the public to talking with you. We have a proper location. We have office. We have places where you can come sit down with us, right? One-to-one, we can share with you exactly how that works. But I want you guys to take charge of your finance and let this GoFundMe go forever, right? Emergency purpose for something for students we need to use, we can use it. But do not depend on GoFundMe, because the GoFundMe can raise you only for $20, $30, $50,000, $100,000, right? But at the end of the day, that is not a purpose. You have to make sure, if you, excuse me, if you make $100,000, it's a very easy. How do you buy the policies, or how to take care of your family? If you're making $100,000, you make sure 10 times of that $100,000, you have $1 million policy in your hand, not the policy through your company, because those are temporary policies. You have to make your own plans. You can buy something permanent for lifelong till you die, which is going to be granted policy for 100 years, or cash build policies, which can also, you can have income replacement policies as well. So there is so many different ways we can help you guys setting one-to-one. Also, if you look at our history, the brokerage company, we are dealing with so many strong companies in the market. Pacific Life is one of our top brand, right? And Chris is also VP for the from Pacific Life. Nationwide, we have more than 120 companies working with us. We can help you for the proper protections, final expense, index, annuities, premium financing. If somebody own a company and you have a big assets and you want to protect your wealth, we can share with you how to have a estate planning. We have attorneys sitting with us. We can share with you those numbers. You can sit down with them one-to-one, right? We can also do proper planning for you for the tax shelters down the road. What you needed, we'll take care of that part, right? Long-term care, college funding, replacing your income. So many different things we can do it. What you need to do, just give us a call, email us, text us, set up an appointment with me or Singh. We can sit down with you one-to-one, right? And then from there, we can actually make a plan for you to build your wealth for lifelong. It can be tax deferred, tax-free income, whichever way you wanted to do it. With that, I want to say thanks to, again, our president, Ms. Madhu, for giving us the opportunity to be part of ATA. I am actually permanent member with the ATA as well for such a long time, just because Anil is a good friend of mine, and I understand what ATA is doing. So this is one way we can help our community. When I say our community, that don't mean that we cannot help outside the community as well. We can help. We live in America. We can help whoever we need it. We are always there for you. With that, thank you very much, Chris, Harmeet, all the ATA team. Really appreciate it, Mr. Shrikant. Stage is yours. Back to you. If you have any question, we are ready to give answer. We also have the names for the referrals. Who is the winner? We can give you that as well. Thank you.
Thank you. Thank you very much. Thank you very much, Lada, Harmeet, and Chris. That was very informative. So it really helped, especially me, listening to this conversation. So, so we have a couple of questions here. One gentleman, PT, was asking about the fees and commissions for IULs, the indexed universal life insurance. So the commissions and fees. This question goes to Harmeet.
Okay, sure. Okay, can you all hear me? Okay, yes. So of course, there are definitely fees and everything with these products. Okay, and a lot of us out there, we feel like, okay, the commissions are very high, everything is very high. But the thing is, as we're doing these illustrations, all the cost and fees and everything is already built in the illustration. So when we do a one-on-one, there's nothing hidden at all. All the fee structure is already built in. So once it's built in, we can still show you how you can still generate a great amounts of income as well if you if you structure the product correctly. Okay. So yes, there are fees, but it's basically, the companies, whoever we represent, right? Any policy out there, right? Term, IULs, whole life, there's always fees over, that commissions are sent out. But basically, it's built in the illustration. So that's one good part. It will be part of the cost of insurance, and the whole structure will be there once we do a illustration for you. So it's nothing that will be outside of that. And if Lara wants to add on, you can add on as well.
So Shirikan, that's a very good question. If somebody is asking the question, I appreciate that. See, look at this way. If in a market, everything is for profit, we can build something for a client, which the client is going to be profitable, right? When it's come to commissions or anything like that, that is paid by the companies directly to us, not taken out from the client's pocket in the beginning, right? So it's very important. Any investment you do in a market is like a 401k. 401k also have a fees involved for the lifetime, right? So it's not like anything is free, but if we can bring you a profit, 10%, 15%, 20% profit back to your pocket, that means we are giving you a lot of good opportunity to build your wealth in such a way. But I love the question. Back to you, sir.
Does Chris want to add anything?
That's great. So is there any way the gentleman can contact you? I'm assuming it's case by case, right? So well, we will pass on your information. It's on the flyer as well. So we can pass on your information, and then gentleman can ask you a question directly, because it's case by case.
Very true.
Yeah. So we have another question from Mr. NR. He's asking, is it possible to share this presentation to them? So that's would it be comfortable?
No, this presentation is not actually for public to share. This is for internal use only, for the education purpose. But we can send you proper brochures, email it to you, which can actually help you understand everything what we talk about it. So there's a lot of information in there, which is approved by the compliance and everything. We can actually email it to you. Yes, not the presentation, but yes, actually brochures. And again, when they sit down with us with the appointment one-to-one, they don't have to buy anything. They can sit down with us and understand what we're doing and how can we build their wealth. At the same time, if they would like to go through us, really appreciate it. This is our bread and butter. This is what we're doing for living as well. But again, it's not necessary to buy from us, but you can always learn from us, set up appointment.
That's great. Excellent. Thanks for all your time. Another question, it's coming from me, especially to all of one for each. So the first question goes to Chris. So Chris, we have a question. I mean, I have a doubt, right? So for example, I work for a corporate company called A, B, and C. Say, for example, a financial company, say Goldman Sachs, right? So it's been maintained. All my 401k or the retirement funds are maintained by them. So how do we transfer or take your expertise in this juncture? Is it something where you have to package it outside, or how does it help though? If you want us to manage it.
So let me just make sure I'm understanding it. So you have retirement money, pre-tax money, with another financial firm. Is that correct?
Yeah. So say for example, if I'm an employee of Goldman Sachs, right? So I have my retirement account there. So is it something, it's been currently managed by some of the financial engines? Hopefully you have heard it. So is it something similar to that, what you guys are going to be advising, or you'll be a different part of it?
So I would say, everyone's unique, everyone's different, everyone's situation is a little bit different. But if I can make a comment, obviously Lada and Harmeet can obviously direct you and help guide you with the best solution if it's moving that money. Generally speaking, though, and this goes to the three different buckets. If you're thinking about pre-tax money, that's the retirement assets, the 401k, the IRA money. Those are pre-tax money. And generally speaking, if we're going to talk about life insurance, generally speaking, life insurance is after-tax money, right? So if you've created this big nest egg of retirement money, could you move that money and put it into life insurance? The answer is yes, but the problem is now you have to take pre-tax money, make a distribution to yourself, which would cause a taxable event, that's something you need to consider. And if you're below 59 and a half, which is the age that the IRS says you can start accessing that for retirement without any penalty, then you're okay there. But do you want to realize a taxable event by distributing that money? That's an answer that only you with Lada and Hammy can answer. And then you have to consider penalties if you're younger than 59 and a half. So could it be done? Yes. Would it be in your best interest to do it? They'd really have to look at your situation and see if it would be if you would be better served doing that in the future.
Okay, thank you.
Mm-hmm.
And thank you very much for that, Chris. It really helps a lot. So for Harmeet, right? So we have say, for example, I'm just taking two hypothetical scenarios on our Indian community here, right? So people work as independent consultants, people work in corporates as a full-time employees. So let's talk about full-time employees in the corporates, right? So they have their group universal life insurance. So can we buy, apart from that, what we have, what the corporation is, what the firm is offering, can we buy separately with you guys? That's number one. And if I'm a contractor, so if my employer is not offering all the group life insurance, so is it possible? Can I take it? Can I buy it outside? So this will, when Lada brought a good point on the GoFundMe, right? So this is very beneficial for everybody because we cannot leave, God forbid, so if something happens, we don't want to leave our families on the streets, right? So we just want to secure them. So this is very important. So how does it work? Can you help us? And is it simple? Going to a doctor, getting all these appointments, and how does it work? Can you please explain the process?
Definitely. So to answer the question, it is very common. We meet many individuals that have a group policy from their work, and they buy an individual policy as well. And the reason is because group policy, it's great. You have, first of all, it's great you're secured and you have some protection, because that is amazing. Because many of us don't. Okay. So with group policies, what happens is that it's basically a term policy. All right, that's what it is. It's a term policy. You get it cheap. It's a group rate. Okay, but it's only the duration as long as you're working for the company, you have the policy that's in place. Okay, the day you leave the company, you have a small time frame, or you can convert it into an individual policy, but the rates are going to be a lot higher. So group policies are basically temporary for the time being. And yes, you can get an individual policy. The overall steps would be, we would, first sit down with you. We could do a Zoom call, whatever is easier, and we'll understand what you're looking for. Because as we were talking about earlier, right, there's so many different types of policies that are out there. Is term suitable for you? Is guaranteed UL suitable for you? Or if you're looking to build some income and have some cash value, maybe IUL might be suitable for you. And the overall steps is that we'll sit down with you, right? We'll figure out what's the game plan, right? What suits you and your family the best. And from there, basically, it's a quick application. And when it comes to going to the doctor and all these things, nowadays there are some companies out there will do an online interview. Okay, they'll do an online interview. They'll get the records from your doctor. Okay, and there are ways that they might even escalate the policy, right, without doing any blood work. It really depends. And if they do need blood work, we'll schedule a time. They'll come to your house or your workplace, whatever is easier for you, and they'll come over and they'll do the blood work from the company. And it's no cost or anything at all for that part, right? If you want to go for the policy, we do the application, they do the blood work, and let's say, the rating comes different, and you decide not to go for the policy, that's totally fine as well. Okay, so it's a risk-free application, but the most important part is, what are you looking for? Okay, and then from there we can guide you and show you the next step. I hope that answers your question. Thank you.
Yeah, that helps.
Add anything? Okay.
So yeah, and then thank you very much for everything. So Chris, Harmeet, and Lara. And this is very helpful. And I urge all the members or the listeners, please take life insurance, which is very important. Nowadays, we are seeing a lot of GoFund, which breaks our heart, which is not a good sign. So I request everybody to take the insurance, which is very much indeed needed. It's more than like buying a car or something like that. Okay. And with that note, thank you very much for all the gentlemen and all the people who are asking the questions, and then all the audience. And
Shrikant, before you close, please give me opportunity to talk one more thing,
Sure.
if you don't mind.
Please.
So I want to say thanks to you, Anil, Madhuji, and everybody. But at the same time, one thing for everybody. This financial education seminar is very short and very limited information. We also do 401k rollover if somebody needed, just in case somebody's money sitting in one company, and we can roll over to lifetime income for that part. There is also chance for the bonus like 10, 20, and 25% to rolling over the money to a different account as well. Same time, in early age, if somebody want to protect their life today and say, you know what, at least I know I'm 40-year-old, for next 25 years, my kids are growing, my house having a mortgage, and I want to make sure I cover my death benefit, but later on I want living benefit. So we can always build such a great life insurance which can cover them for first 25, 30 years. For the life insurance, they can use the cash value as well, but then later, if they don't want death benefit, the death benefit can be changed to lifetime income as well from age 65 to 85, for example. So which is also called income replacement tools, which is going to be tax free. So we do that as well. So just wanted to see if somebody needs some more information, like you said earlier, they can contact us directly. We can sit down with them one-to-one, no obligation to buy, but we can educate them in such a good way. But again, thank you very much. Back to you, sir.
Thank you, Lara. So yeah, so the audience listening, so it's not going to harm. So set up a quick call with them. Encourage your friends and families to take the life insurance, which is very important. So, and on that note, thank you very much, everybody. And if you guys are not,
Can you announce the winners, please?
yeah, and we have a raffle winners. We can announce on the chat.
Yeah. Can you announce that in chat, Hammy?
Oh yeah, you want me to place on the chat?
Yeah.
Sure. 1 second.
I can try to read the names anyway.
Oh, 1 second.
Yeah, you can read the names, so it's fair.
Yeah. In Draza, and excuse me for if I say your name a little bit differently, but
I just posted it in the chat.
Yeah, he posted in chat. Indraza Bilakanti, Ganesh Kasam, Prakash, Raghu, and Manmohan Reddy. So congratulations to all of you. We'll send you gift card by email very soon. So with that, thank you. Back to you, sir.
Thank you all, and congratulations to the winners. So yeah, with that note, if you guys are not the members of ATA, please take membership and encourage your family and friends to take the memberships. And with that note, thank you very much for your time today. Hopefully this is helpful. Thank you.